very quickly what we are doing for today. I've divided it into the various chapters or sections, and the way in which each section is set up, we're starting with the section A type questions, and then we're moving on to the section B type questions. I have not included section C for this session. And the idea here is not to only depart content to you, but also at the same time give you the necessary exam techniques which you are going to be using. Right, let's get going. Topic 1 deals with the circular flow. And there we see 1.1, choose one of the following options, indicate the number and the letter only. So by now, you should already know how to answer this with the number and only the letter next to it, because you've been doing this since grade 10. So we see here, when you're doing multiple choice questions, you look at the statement that's been given and you look for any things that can give you any clues within the statement. So if you look at the first one here, it says an open economy is best described as a something sector economy. So the whole question is around the term open economy. So before looking at what the options are, you need to be asking yourself at this point, what is my understanding of an open economy? So when I hear the words open economy, I know that within an open economy, the role players involved are the consumers, the businesses, the government, as well as the foreign sector. It is that inclusion of the foreign sector which changes from a closed economy to an open economy. So if we look at that, we have 4 role players. So therefore, for 1.1.1, your answer would be D, which is 4. Okay? So just to recap that again, an open economy has the consumer, the business, the government, as well as the foreign sector. Therefore, that answer is 4. Moving on to 1.1.2. Labor can be bought and sold in which market? Once again, my question is around the topic of labor. What do I understand by the concept of labor? The very first thing you were taught, even as far back as grade 8 and 9, was that labor is one of the factors of production. If you remember your factors of production, there are 4 of them. And in order to remember those 4 factors of production, you need to remember the word cell, C-E-L-L. Most of us have cellular phones, so it's an easy word to remember, C-E-L-L, C for capital, E for entrepreneurship, L for land, and the second L for labor. So here we're dealing with one of the factors of production. So therefore, the market that we're dealing with is obviously going to be the factor market. So if I see here from my options that are given to me, the answer for 1.1.2 would be B. So labor can be bought and sold in the factor market. Moving down to 1.1.3. Investment is an example of a or and what in the circular flow model. Now, if you think about it, what leads to investment? Remember, within the circular flow, we have our injections and our leakages. And for every leakage, there is also an injection that goes with it. So let's just for a moment just stop here and look at that very closely. So leakages is anything that causes money to leave the flow. So if you think of things such as everybody has to pay, everybody who's working needs to pay taxes. So immediately that is money which is taken out of my earnings, which I do not have to spend. I can't put that back, so it's removed from the flow. But those taxes is paid to the government, which government will use to spend on goods and services. So the taxes from the consumer is a leakage, but in the hands of government, those taxes become an injection again, because that's the money government is going to use to spend on public goods and services. The second leakage that we have is we also have our imports. Now this confuses a lot of kids. They say, but imports, you're receiving goods, how can that be a leakage? Yes, you're quite right. You're receiving the goods, but you are having to spend money to receive those goods. So imports causes money to leave the flow. So therefore that is a leakage. And the opposite of imports are your exports, because when you sell your goods to others, you are going to receive money in return for those goods that you're sold. So far we've got taxes is the leakage, the injection is government spending. Imports is a leakage, your injection is exports. And the last one is savings. My money that I earn, I don't spend all of it, I save some of that money. So I'm taking it out of the flow. But that money is saved within a bank, and that then makes money available to the banks to give out to businesses as loans when businesses come because they want to buy a new machine or build a new building and they need the funds for it. They will approach the banks for a loan, and it is those savings of ours that's in the bank that then gets given to the businesses. So therefore, savings is the leakage, but investment in the hand of the business becomes an injection. So therefore, if we go back to the question, 1.1.3, investment is an example of an injection in the circular flow, which would be option B. Right, 1.1.4. Production by the citizens of a country, locally and abroad, is called the what product? Right. So here you see the two concepts we're dealing with is national and domestic, right? So we have your GDP, which is your gross domestic product. Now, what does it mean? Domestic, what's happening inside the borders of a country. So whether the production is being done by citizens or foreigners, as long as it's happening within the borders of a country, that will be added to your gross domestic product. Whereas everything that is produced by the citizens of the country, whether they are at home or whether they are abroad, it doesn't matter. Anything produced by the citizens of the country, that would form part of your gross national product. So do you see the difference between the two? GDP is what happens inside the country by both foreigners and locals, whereas your gross national product is what is happening only from the citizens or the residents of a country, whether they are doing it at home or abroad. Right, that brings us to the end of the Section A type questions. We're moving on to your 8 markers, which is your longer type questions. So if you look here, we're going to look at the multiplier. So yes, it is under the topic circular flow. It is linked to that section. So the multiplier causes a lot of concern amongst learners. They get very confused with this section. So let's just read the question first of all. The first part of the question says, calculate the change in aggregate income. Now already I see there's a calculation that needs to take place. So immediately you need to think of what are the calculations that I've been taught with regards to the multiplier. And there is one major one that you should remember the formula for, and that is how to calculate the value of your multiplier. And in order to calculate the value of your multiplier, that would be the formula K is equal to 1 over 1 minus MPC. That is one of the formulas you need to always remember, right? And then that value is then multiplied by what has been injected to get your change in your income. So we know that our injection is 20 billion because it says there, calculate the change in aggregate income if there is an injection of 20 billion into the economy with a marginal propensity to save of 0.3. But I just said to you now that the formula is 1 over 1 minus MPC. But we need to understand that MPC plus MPS equals 1. Because what are we saying? The 1 represents the total earnings of the consumer. So what they do is some of that earnings they are going to spend and some of it they are going to save. So therefore, if a consumer decides to save 40% of their earnings, that means they're going to spend 60%. So 1 minus 0.6 is going to give me 0.4. So if you're saying 1 over 1 minus MPC is exactly the same like saying 1 over MPS, because MPC plus MPS equals 1. Right? So if you think of your maths, knowledge needs to come in here. So if you're saying 1 minus MPC would then be equal to MPS. Therefore, our calculation here says the multiplier is equal to 1 over MPS because that's the information that we've been given. So we have 1 divided by 0.3, which gives us a total of 3.3. So therefore, the change in national income would be the value of the multiplier, which is the 3.3, times the amount that which was injected was the 20 billion. So 3.3 times 20 billion is equal to, most correct answer would be 66,66666 was what the calculator will give you. And once again, in maths you are taught, if the number after the comma is 5 or more, then that goes to the next value. So therefore, your final answer would be 67 Rand. According to the memo that was given here, they would have accepted any of these answers as being correct. Okay? Please just note, if the question says you round off to the nearest decimal, then 67 billion Rand would be the final answer. But that's only for 4 marks and the question is for 8 because it goes on further. So the calculation was for 4 marks and then the next part of the question says, show how the multiplier effect could influence the government to create more jobs. Okay, so what is that saying here? Okay, so what we're saying here is that people are spending and a 20 billion injection into the economy will eventually lead to a 67 billion Rand change in national income. So what does this mean? Jobs will be created, right? Because as more money, as more income is being earned in the economy, people are willing to spend more. So the more people spend, there's a greater demand for goods and services, so businesses will have to supply more, and with the result, they then have to employ more people in order to increase that supply, right? Another part that can take place is that government can also decrease taxation, right? Now, please remember, you don't have to use the explanation as it's given here in the memo. You can use your own description but talking about this particular concept. So if you think about governments decreasing taxation, what does that mean? As a consumer, you will have more disposable income, meaning you have more money to spend. And as we just said earlier on, the more money being spent in the economy, more goods and services have to be produced. So therefore, that leads to increased employment, right? And when we talk about decreasing taxation, pay as you earn or income tax is the one side, but company tax is another tax that would also then be decreased, therefore giving businesses more money at their disposal, which they can then use to grow their businesses in whatever way. And one of the examples given from the answer here is that businesses can then now focus on labor-intensive production methods because they have that extra money to spend on wages and salaries. Okay? Right. The next section, still dealing with the circular flow, are the national account aggregates. Now remember, I did this section with you in term 1. We looked at national account aggregates and we saw that there were 3 of them. And the 3, so when I see this heading, I should already see, oh, national account aggregates, I remember this. There are 3 ways to calculate GDP, and I said you remember the word pi, and P for production method, I for income method, and obviously E for expenditure method. You also need to remember what do each of these deal with. So your production method, you're looking at the various sectors. With your income method, you're looking at your factors of production. And with the expenditure method, you're looking at money being spent by the various role players in the economy. So let's look at our table that has been given to us. And from this table, I see they talk about compensation of employees, which is wages and salaries, net operating surplus, which is profit, and consumption of fixed capital, which is depreciation. So from this year, I can see compensation, wages and salaries, that's labor. Net operating surplus, another term for it is profit, which refers to entrepreneurship. So here, I'm dealing with, once again, factors of production. So from what I just said to you, if I'm dealing here with factors of production, that I already now know which method we are dealing with here. And obviously the method being shown here is the income method. Now all of this I look at first before I look at the questions that follow. So now I know exactly what I'm dealing with. I'm looking at a table representing the calculation for GDP using the income method. Now I go and look at what are the questions that are being asked. Right, question 1, 1.3.1 says, identify the factor of production in the table above that receives the biggest portion of the national income. Now that is directly off the table. All you need to do is to go to your table and go and read which factor has got the biggest portion of national income. So you can't look at these ones, because these are totals. So we're going to ignore those ones and we see where is the biggest number, and we find that 2051326 is the biggest number out of all of that, and that is compensation of employees. So who gets wages and salaries? Which factor of production receives that? That is the factor labor, right? So that's your 1 mark there. Which method was used to calculate? But we've already ascertained that when we looked at our question, so we already know that answer is the income method. Right, 1.3.3. Briefly describe the term basic prices. Please, you do not have to follow the answer given in the memo. You see here, it says, accept any other correct relevant response. So all you need to remember when you're talking about basic prices, you are merely speaking about what is the cost of production? So when you're dealing with the cost of production, that is what basic prices mean. And remember, basic prices you only find in the production method and in the income method, not in the expenditure method. But the idea behind the term basic price means the cost, the raw cost of production. Okay. So even if you had to say that there, that basic prices refers to the cost of producing the product, you would have also been given the 2 marks there. 1.3.4, briefly explain how subsidies can influence production. Right. So in order to answer this question, I need to understand what is the meaning of the concept of subsidies. Right? So let's just for a moment have a look at what is the meaning of the term subsidies. Now remember, in grade 10, you did methods of government involvement, and 2 of them dealt with subsidies. There was subsidies on producers as well as subsidies for the consumer, right? Now this particular question is dealing with the influence on production. So obviously you're looking at subsidies for producers. So why would government give a subsidy? Obviously you are producing something which is needed in the marketplace, so therefore they want to encourage you to carry on producing. So by them subsidizing your production, it means your cost of production is much lower. So what does this mean? When you sell to the consumer, you can sell it at a lower price. Alternatively, you could also use that extra funds that you have to increase the capacity of your production. So if you think of how it influences production, there are 2 things that happen here. You can either reduce your cost of production, or it encourages producers to increase output. Then the last question here is your 1.3.5. Calculate the gross domestic product at market prices A and show all calculations. So I need to go back to my table and see where have they put A, and I see that is where it is, GDP at market prices. So to get to A, I need to move from GVA at basic price to GDP at market price. Okay, so to get from basic to market prices, I have to add taxes on products and subtract my subsidies. So therefore, the final answer is then your 3871214, which is my basic price, plus the taxes of 484059, minus the subsidies, which is the 16415, and that gives you the final answer of 4338858. Okay? Now please look, your table says here rand million. So if you are giving this as your final answer, you are not going to get 4 marks, because they're going to subtract marks because you've left out the rand and you've left out the billion at the end. So you must ensure that you have the rand signed as well as the billion in there to get the full mark. Okay. You don't have to insert it there, but in your final answer, you need to have that. Right, that brings us to the end of topic 1, which is the circular flow. Now, please remember the essay or the section C type question attached to this is a discussion on the markets within the circular flow. Right, topic 2, business cycles. We start again with a section A type question. Choose one of the following. Indicate the number and the letter only. Right, we start with 2.1.1. Speaks about the peak of a business cycle. So now I need to understand for me to answer this question, I need to understand what is meant by the term the peak of a business cycle, right? Because from grade 10, or in grade 10 is when we first introduce you to the concept of business cycles. And the first thing we teach you in grade 10 are the various phases of the business cycle. And these phases are the recovery phase, the prosperity phase, the recession phase, and the depression phase. Now, nowhere in these phases, is the word peak mentioned at all, because peak is not a phase, right? The peak, the other thing we teach you is that your business cycle has two turning points. There's an uppermost point and a lower point. So, your upper turning point, that is called your peak. So if you think again of the phases, you start with recovery, moving up to prosperity, then the uppermost phase, which the uppermost turning point is the peak. So that is what is meant by the term the peak of the business cycle, right? It is the uppermost turning point. But that's not what the question is asking. The question is asking you, what is it characterized by? So I need to now think, what is happening during this time? So as I just said, your uppermost point is when there is a prosperity phase. And we know that during this phase, everything's going well, businesses are doing well, people are doing well, businesses and consumers have lots of confidence in the economy. They're just looking to spend money and to buy. So therefore, if I look at the options that are given to me here, the best one out of all of these, the best answer here would be a high demand for credit. Because as I said, people have confidence in the economy. There's lots of money to be made. So there is no worry about how am I going to pay for this at the end of the day, right? So there'll be a high demand for credit, because all of these others do not happen within a prosperity phase, right? There isn't a stable inflation rate because of the high demand. It is causing demand pull inflation to set in. The unemployment rate is dropping and the output is at a high. Okay, so all of these other options given do not reflect a prosperity phase at all. So therefore, the best answer here would be a high demand for credit. Right, 2.2.1, name any two monetary policy instruments used by the South African Reserve Bank. Now, this is also something that causes a lot of confusion with learners. Learners become very confused when you speak about monetary and fiscal policy. They're always confusing the two concepts. So in order to remember, you must always remember your monetary policy is that policy which is monitored by the South African Reserve Bank. Whereas your fiscal policy, on the other hand, is monitored by your revenue services. So your fiscal policy is driven by the Minister of Finance, whereas the monetary policy is driven by your Governor of the Reserve Bank and his team. Okay, and in order to get the monetary policy operating in the way they want to, there are certain instruments which they use. And so now they want you to give any two of these instruments, right? So if you think of the instruments that the monetary policy uses, we all know that the Monetary Policy Committee meets every second month to set the repo rate. So that's the first instrument, is the interest rates, okay? Then they also have other instruments such as open market transactions, cash reserve requirements, foreign exchange controls, etc. Okay, so you only needed to mention two, any two. So there you have a list of 5 or all of the instruments that's used. You only had to mention 2. Okay, so any 2 of these will be accepted as the correct answer. Right. Students don't always understand the term open market transactions. What you need to remember with open market transactions, you need to remember the term government bonds, right? That deals with open market transactions, right? Right, 2.2.2, what is the purpose of a trend line in a business cycle? So if you think of your business cycle graph, you have that wave-like pattern and then there's a line that goes through it. So that trend line can have an upward trajectory, it can move downward, or it can just be a straight line. But what does this line mean? That line tells you where the economy is going, what direction is it heading in. So therefore, the trend line indicates the general direction in which indexes move. So you don't have to even use this. You can even say to just indicate the general direction in which the economy is moving. Because once again, we've got that, accept any other correct relevant response, right? And then the types of business cycles, these you just need to learn off by heart, to know what these 4 types are. And these are the kinds of questions you'll be asked on this. So here you just have to name 2 of them. It's like just listing what they are. Okay. Right, so that brings us to the end of the topic on business cycles. Now please remember your essay question here is the question on new economic paradigm. And obviously an 8 marker that could be asked is to discuss the Phillips curve, which deals with inflation and unemployment, or to talk about the ASAD model, right? Which we would look at, if there is time at the end of this, I will go through that section with you. Otherwise, we'll leave that for another time. Right, topic 3. Here we're dealing with the public sector, and I think this is where most of you would have gotten up to in term 1. Right, we start with the multiple choice type questions once again. And we see here, fiscal policy is, and now just remember, we just spoke about fiscal policy earlier on, and we said not to confuse it with the monetary policy. Fiscal policy is an action taken by government in respect of taxation and what to influence economic activity. Remember, I said to you, your fiscal policy deals with your Minister of Finance, and you remember the Minister of Finance tables his budget speech in February every year. And what is that budget speech all about? It tells us how much money government is expecting to receive, and how does government make their money? From taxation. And what is the other part of the budget? They then tell us how they intend spending this money. So your instruments of your fiscal policy is taxation and government spending. So if I look at the options given, the term government spending is not here, but at point B, they talk about expenditure, which is what government spending is. It's expenditure. So therefore, your answer to 3.1.1 would be B. So your statement would read, fiscal policy is an action taken by government in respect of taxation and expenditure to influence economic activity. 3.1.2 deals with, here we're still busy with the medium-term expenditure framework, also known as the MTEF. Right, your MTEF, that's the budget that gets tabled at the end of February, right? And this budget is done on a yearly basis, but it is not a 1-year government expenditure and revenue projection. So it is definitely not B, right? So it is not B. So therefore, we know it's not that one. What actually happens is that when that budget is tabled, there are certain projects and assignments that government will say they want to invest in, but it is not always feasible to do it immediately. So it's an idea that they have that they want to put in place. But obviously they need to first make sure all the logistical issues are sorted out before they can go ahead with the project. So therefore, your budget is tabled for the next 3 years. Okay? So every year there's a budget, but it isn't a budget for 1 year. It is a 3-year plan that they have to table. So therefore, your answer here would be point A, which is your 3-year government expenditure and revenue projection. Because you just, on this, the MTF, you have to bear in mind that the MTF is tabled in February. But in October, there's a monetary budget policy statement which gets tabled in October. Then they sort of rectify any of those things which, because by then they can see, okay, we thought we would get in so much money, but we didn't for whatever reason. And some projects that they were planning to implement is not going to pan out because maybe some investor pulled out or whatever. So now in October, they've got to re-look and make some adjustments. And therefore then, when they read out the new budget in February, they can take all of those things into account again. So therefore, it's a 3-year program, but there are adjustments made on the way. Right. We're moving on to the section B type questions here. 3.2, study the table below and answer the questions that follow. So the table deals with the budget speech of 2019, and they're talking about changes in indirect taxes, and there they've listed what the indirect taxes are and the increases in the tax rates. Right, so now I have an idea of what this, the questioning is going to be something to do with taxes, right, and taxation. So 3.2.1, which ministry or department is responsible for the presentation of the national budget speech to the parliament? And I just said to you earlier on, the Minister of Finance does that. So therefore, the answer there would be the Department of Finance. Name one form of direct tax. Now, please, you can't find the answer in the table here because the table lists your indirect taxes, and the question deals with direct taxes, right? Direct taxes are those taxes which affects people's income directly, such as your income tax, your company tax, and capital tax. Those things affect the income directly. So there's 1, 2, 3, 4 listed in the memo. You only need to give 1, okay? Briefly describe the term budget. We've touched on this briefly as well in my discussion earlier on, where I said to you the government draws up a budget which will show the income that government earns in the form of taxation and how they intend spending that money that they are earning in the form of government expenditure. And that would be enough to describe the term budget. You do not have to use a budget is a document showing anticipated revenue and estimated expenditure for a specific period. Yes, it is for a specific period, but we just need to say you could also use, instead of the word anticipated, you could speak about expected revenue and estimated expenditure. You could also call that planned expenditure. Okay, because most students who do economics, English is not their first language. So they don't always have a command of the language to give you these fancy answers, okay? And we acknowledge that. Right, 3.2.4, how will the increase in carbon tax on plastic bags benefit the economy? So obviously we already know the reason that this was instituted is obviously to fight the scourge of the pollution that we're suffering with. So obviously an increase in that, it will reduce the environmental pollution, and also taxation being an income for government, it is going to increase the government revenue, or you can just say it will increase government income. That would also be acceptable there. Right, that was a very straightforward question. 3.2.5, Briefly describe the extent to which the government addresses economic equity. Okay. So here they're not being very specific. This is a very open-ended question in that they're not saying to you what are the positives or what are the negatives. They're just saying to you, to which extent do they address the issue of economic equity? So some people will argue and say, no, they're not addressing it at all. And others will say, yes, they have tried to address this issue. So it doesn't matter which stance you take in answering this, either will be accepted. Okay. So you see here, there they talk about how the budget has addressed the equity, and here they speak about how they fail to address economic equity. Okay, so bearing in mind, government had decided to increase VAT. And immediately when that happened, people said, but this is not fair, because the people who are going to suffer most are the people at the lower income, in the lower income earners, because we all pay the same amount of taxes, and already these people are having to pay the same amount of money that everybody else is paying for their goods and services, and by increasing the VAT, it means they're having to pay more for that, okay? As well as the carbon tax for that has to also be paid, right? So, yes, the top part here deals with the benefits or the positives regarding the way in which they address economic equity, and the bottom here deals with how they have not addressed it. Okay, so the other thing, students, you have to bear in mind is not to get confused between the concepts of economic equity and income equity, right? I find that sometimes people do not know the difference between what is economic equality and what is income equality, okay? Economic means everybody having an opportunity to be part, to be able to buy goods and services, okay? So that is the main thing, right? And to access certain services, that everybody is free to access services such as schooling, healthcare, etc., right? So you need to formulate your answer around those kinds of issues when you are answering this. So if you look in the memo here, it says providing most required free social services, example, education, primary health care, free tertiary education, provision of housing and utilities to the poorest part of the community. Please, it has got nothing to do with minimum wages or any of, because minimum wage is more about an income issue, right? So please do not get confused with that there. Okay. Question 3.3. We're moving on to another section of the public sector and taxation. Right. There's what is left off here is obviously the term tax revenue. So I'm looking at the graph where I'm looking at the relationship between tax revenue and tax rate. So in economics, we deal with lots of graphs. So you should already know when we're dealing tax revenue and tax rate, which graph am I looking at here? And obviously, this graph that I'm looking at here is what is known as the Laffer curve, right? Remember, before I look at my questions, I first look at what does this information telling me? And I see here they've got tax rate percentages. So I've got 10%, 20%, 45%, 65%, and 100%. And when 10% tax is charged, the government is earning 100 billion rand. When they charge 20%, they're earning 150 billion rand. When they charge 45%, they're earning 200 billion rand. And what I note, after 45, it's going down now. So at 65%, they're only earning 175 billion. And if you eventually reach 100%, then they're earning nothing. Because what is this telling me? This is giving me the relationship between what the government earns and what taxes they are charging. So automatically what it's saying here is, depending on what you are earning, so if you're having to pay 10% of your earnings, what that means is for every 100 Rand you earn, 10 Rand is going to the government. Okay? So, and that is how it goes up and up. So therefore, at 100%, they're not making any money because nobody's going to work for free. Because what they're saying here is that whatever you earn, the government is going to take. And nobody's going to be willing to do that. So therefore, at 100%, your revenue is zero. You also note that the difference between 45% and 65, at 45%, the government is earning a 200 billion, but at 65%, they're only earning 175 billion. Because what they're saying here is that 65 Rand of every 100 Rand you're earning is going to go to the government. And when that happens, some people are just going to say, I'm sorry, I'm not going to work anymore because I'm only getting 35 Rand. Most of my earnings is going to the government. Whereas at 45, people are still happy because they are taking home 55 Rand for every 100 Rand. Okay. Let's go and have a look at the kinds of questions they ask. Identify the curve, which we've done right off the bat. We said the relationship between tax revenue and the tax rate is shown by the Laffer curve. At what rate will government revenue be maximized? In other words, where will they earn the most? So if we look here, the most that they can earn is 200 billion, and that is at a 45% rate, right? How much revenue will government receive if the tax rate is 100%? We already identified that they're not going to get anything because at 100, there is zero income for them. Right. What effect will a decrease in tax rate from 65 to 45% have on tax revenue? Right. So if you see there, if they decreased it from 65 to 45, so at 65, government is earning 175 billion, but at 45, they're earning 200 billion. So when there's a decrease, government is going to be earning more money, right? So you can then say they'll be earning 25 billion more, or however you want to answer that. But the main thing is that you have to mention that there's an increase in tax revenue for government. That's what we're looking for, okay? But you can't just say increase in tax revenue. Then you're only going to get 1 mark. You've got to explain that, okay? Right. What consequence could a 1% VAT increase have on the different role players in the South African economy? Now, please, they're speaking about the role players in the economy. Now, you've got to remember, if you're talking about role players, you're talking about government, you're talking about consumers, and you're talking about businesses. Okay? So, if you think from a government perspective, an increase in VAT, which is a tax, so that means government is going to earn more revenue. But for businesses and consumers, things are going to get more expensive for them. Okay, so with the result, obviously, people buy less and businesses are going to produce less. And then that is, in a nutshell, the kind of discussion you would have to give, right? You do not, once again, have to give a memo answer as set out here, because there they tell us again, accept any other correct relevant response, right? So what I need you to take away from this question is that when they speak about the role players, they're talking government, consumers, businesses, right? And it goes without saying, government is earning more income, but producers and consumers are having to spend more money, which is now going to cause them to reduce. Government is going to reduce their production levels, and consumers are going to reduce their spending. Right, 3.5. How does the government use fiscal policy to restrict the economy? Now, once again, we first need to look at, we're talking fiscal policy, and we said earlier on, when we're talking fiscal policy, you're talking government spending and you're talking taxation, right? And then you're talking about restricting the economy. So they are wanting to decrease the spending that's taking place in the economy, right? They want to restrict things that is happening. Okay, so in order to answer this question once again, we said our two items of the fiscal policy is government spending and taxation. Now remember, your government acts as the parent does in a family, right? Always think of your economy as your family, where the government is the parent. So when government wants consumers to do something, they need to take the lead. The same thing if a parent says to you, don't do this, don't do that, they've got to teach by example. So when government wants to restrict the economy, that means they don't want to see so much spending happening, because obviously they're worried about inflation. So what they will do is government will then reduce their spending first. Okay? So by government reducing their spending, consumers and businesses say, oh wait, they're not spending so much, so maybe we should also restrict our spending. And obviously, when there is not that much being spent in an economy, so there's not a big demand for goods and services, so with the result, businesses have to pull back the production. And what happens when they start pulling back the production? This could lead to unemployment, because now they need fewer staff members, etc. So yes, the demand will decrease, but it could also lead to an increase in unemployment on the other hand. Okay. The other part is that government could, we said the second instrument of the fiscal policy is your taxation. So what government could also do is they could just simply increase taxes. And by increasing taxes, and especially if you look at income tax and company tax, by increasing those, you are directly affecting the pocket of the business and the pocket of the consumer. So they don't have extra money to be spending. So therefore, that will also decrease expenditure, right? So either way, they can either decrease government expenditure or they can increase the taxes. But either of these is going to cause a decrease in demand. And we said when demand drops, the production levels drop, which leads to an increase in unemployment as well. Okay, please note here, they say you can use this kind of explanation, which is very textbook orientated and very difficult to remember. It's better if you understand the concept and try to explain it in your own words. Okay. Right. 3.5. How successful, there's a word missing here, has government been to reduce public sector failure? Just change. How successful has government been to reduce public sector failure? Please note, this is a 10 marker. 10 markers are your open-ended questions that you find within your essays in section C. Once again, look at how this question is structured. How successful has government been? And immediately people say, no, but they haven't been successful. And others will say, yes, but they have. It's okay, guys. It doesn't matter which way you look at it, whether you're going to look at it from a positive perspective or a negative perspective. It doesn't say give the positives to show the success of government in reducing public sector failure. It doesn't say give the negatives to show how government has not been able to reduce public sector failure. They just say, how successful have they been? So, in some cases, they've been very successful, and in other cases, they've not been successful. Okay? So, it depends on what is your take. What have you been exposed to? What do you know? Are you more exposed to the negative aspects of public sector failure, or have you seen the positives that government has been trying to do in order to address public sector failure, right? So here you can see they've listed it. The government has reduced public sector failure by, and then they've listed what they've done, right? And then here they've also say government has not been successful in reducing public sector failure. and then they've also given the reasons, right? So once again, this is an open-ended question. It is not, oh, this has to be the answer and there's nothing else. How you discuss it and how you bring it across is entirely up to your own experiences and what you understand by the question about public sector failure. And one of the big things we understand in terms of public sector failure is obviously the whole story around corruption and nepotism. And we also know how they've tried to address that problem was obviously through their auditing and all of those, right? So this is a kind of question that it's not something you can study for. It is entirely up to how much reading you've done outside of the textbook, how much you've involved yourself with what's going on around you, and your understanding of what is happening. Okay, grade 12s, at this point, I would just like us to take a break, stretch our legs, have a cup of coffee, and we'll continue shortly. Thank you.